It's an election year.
So rates been climbing, same on non-QM.
If you're not able to be approved in the Fannie Mae Freddie Mac space, you move to the non-QM world. So what a good broker will do is first review bank statements. We have a proprietary submission LOS, loan operating system. We also offer marketing materials.
Ladies and gentlemen, welcome back to another exciting episode of A&D Market Digest, your go-to source for the latest insights and strategies in the ever-evolving world of mortgages and real estate financing. I'm your host, Nikita Verindab, and today we have two distinguished guests joining us in the studio. First up, have Alex Suslov, Head of Capital Markets, bringing us his wealth of experience and expertise in the financial markets. And of course, we're also delighted to have with us Mark Glaser, Wholesale Team Lead, sharing his insights on the dynamic landscape of business expansion and development. Today, we'll be diving into some pressing topics that impact the financial industry and the real estate market. We'll discuss current market trends and the rates, explore strategies for qualifying clients who may not meet the criteria for non-QM loans, and delve into the innovative ways technology and systems can enhance client experience and services. But before we dive in, if you haven't already, please don't forget to subscribe to our YouTube channel so you never miss an episode packed with valuable insights. Now, let's get started. Good afternoon, Mark, Alex. Thank you for joining us today for another Digest episode. I'm glad that you were able to make it. Thank you so much for coming.
Thank you for having me. Thank you, Alex. Pleasure.
I bet we'll have a great time here.
As always, how's it been? Mark, it's been a while. I haven't seen you for a while.
Business has been good.
All right.
A&D has been keeping up with good production, submissions, and of course, closings.
The most important part. So you're staying busy.
We are.
Nice. That's great. Alex, how about you?
Same here. When Mark is busy, I am busy.
Do you make Mark busy?
Or the other way around.
Well, it works both ways.
Sales is there to support. Absolutely.
Right. I made amazing questions for today. So I hope we'll find an answer to them. Alex, could you please provide an overview of what's going on with the interest rate right now?
Absolutely. I think for the past year to year and a half, we've seen an increase in the rates. The rates went up from as low as 2%. I've even seen myself 1.75 on a conventional mortgage loan to 7.5% today. So rates been climbing. Same on non-QM. There is spread between conventional and non-QM on average 150 to 200 basis points in the rate. The trend was going up, and of course that affected the qualification of the borrowers. That basically made some borrowers to not qualify for conventional loan. They fall back to non-QM from the non-QM bank statement or P&L loan. They fall to DSCR loan, and Mark can, I believe, suffice to that. So there was a little reshape of the market, and brokers and borrowers were adjusting to new programs, to moving some loans from conventional to non-QM, so on and so forth. So right now, I think we're pretty close to the peak, but I believe it's a little early to say that we are there. Since we're getting different messages from Federal Reserve, from their meetings, and every time they kind of keep pushing the due date, stopping and dropping the rates to a little further and further date. So we're somewhere close, but a little early to say so.
I think from what Alex is saying, what has occurred that's really interesting is Fannie Mae has reached parity with non-QM from a rate perspective. So in the Fannie Mae space, you need tax returns, W-2, pay stubs. When their interest rates are similar to ours and you're having issues qualifying with your standard tax return W-2 borrower, if you can't qualify in that space, you could move to the non-QM space, which does a deeper dive on your bank statements, does a deeper dive on a profit and loss. So you may not qualify through your standard tax return programs, where you do a lot of deductions for the purposes of just not paying taxes. But when you look at a bank statement loan, you're looking at their gross deposits. They're actually their good income stream, and they can qualify through that method. Or you go through a P&L stream. Again, Fannie Mae tax returns use a method to lower your taxable income on purpose, that you don't have to pay taxes. But when you use a bank statement loan or you use a profit and loss loan, it more gives you a better understanding of where their true income is. And if you're doing an investor loan, you're able to do pretty much whatever the rent base is on the property.
Mm-hmm.
So with the parity of rates, Fannie Mae close to our rates, and you don't qualify in one, it's going to be the same rate. You're able to go non-QM. And in agreement with Alex, in the coming weeks, I believe next week, the Fed's meeting again. They're going to start the discussions. We'll know then whether or not they've reached the point where they've raised enough. And then we may see the Fannie Mae rate go down and our rate will go down, and we still may have a little bit of parity. And again, that's what A&D is here for. When tax returns are at issue, you move to the non-QM space, bank statement loans, P&L loans for primary, second homes, and investors, of course, DSCR based on rent.
Beautiful. Mark, from a business development perspective, how do these trends actually affect the client behavior?
Well, once again, if you're not able to be approved in the Fannie Mae Freddie Mac space, you move to the non-QM world. Generally, our rates were at least a point to a point and a half higher than the Fannie rates, sometimes even higher than that. We're closer in rates, especially on investor loans. Rates are not as significant because I need to qualify. I need to buy my house. So you're a borrower who may have been in an area of 5.5%, 6% in Fannie is going to agree to a 7.25%, 7.5%, 7.99 rate if they get their home. And they understand a year, 2, 3 years down the road, if rates drop significantly, they'll refinance.
Mark, what strategies actually can you share for qualifying clients who may not meet the traditional criteria for non-QM loans?
So what a good broker will do is first review bank statements. In this case now, we're in the period of September of 22 through August of 23, the bank statement period of 1 year. A broker could review this, speak to their AE at A&D Mortgage, who is very well versed in our guidelines, and see how that looks. And then they could also consider the profit and loss side, which is a slightly higher rate than the bank statement. This bank statement is more of an income verifying, and the P&L relies on your CPA or tax preparer. They'll look at both, and then they work with the AE here at A&D Mortgage to qualify your borrower. That's how you would do it.
Wonderful. That was actually pretty clear. Thank you so much. Another one actually, Tim, just like throwing the questions. Mark, how can technology and systems be leveraged to improve the overall experience?
Well, A&D has been a leader in technology. We have a quick pricer on the front page of our website. You don't have to log in. It's hooked up directly to our current rates. So you could go there and pretty much test everything, even a conventional loan. We still do conventional lending, but more in the non-QM spaces where we are. But you could check all the types of loans, and you could test all types of credit scores, LTVs. All of our income types are right there, technology-wise. Submission-wise, we have a proprietary submission LOS, loan operating system, which makes it easy for a broker to come into our system, import their 1003, which is called a 3.4 MISMO, and have their loan in our system, and then work through to see what works as far as income-wise, even when it arrives here, before, of course, they submit the loan. So we have that technology ability. We also offer, from Perspectives, marketing materials. It's full service here at A&D Mortgage.
Alex, actually, and what role does analytics play in tailoring mortgage products?
I would say crucial, because without analytics, you pretty much cannot find the right direction. You might get a lot of delinquencies on your loans. You might go into wrong products, which are not that favorable to the borrower. So basically, using the analytics, seeing how it's working each and every product, we can tailor our programs to the best criterias. Like, for example, on a DSCR, where I think maybe there are a couple other lenders who are allowed to go by the actual lease, even if the actual lease is higher than the lease agreement, and use it for the DSCR ratio. So things like that, when allows you to find a key spots where you can be competitive and make great programs to the borrowers.
And in that realm, what he's discussing in the DSCR type of program, from an analytics perspective, we offer something called an AirDNA internal calculator for short-term rent. So if a broker brings a long-term loan into our system, and there's currently no lease on that long-term, and no tenant, no lease, we have the option of looking at long-term and short-term here at A&D. And if the short-term, our internal calculator works, they could qualify where other lenders out there, they would not. So we have some internal systems that could allow and give a better experience in the DSCR world using the short-term rental calculator, which we run internally.
Beautiful. I'm pretty sure actually the brokers, because of their AEs, they should know about the technology that A&D Mortgage can offer, right? Because with that technology, it makes the whole process way easier. For example, like that AirDNA we just mentioned. So like we're gonna do it actually for the brokers, so they don't have to worry about that.
Correct. So the AE gives an experience here at A&D Mortgage, which is not like most. We are not just salespeople. We are guideline savvy. My group, I'm the East Coast Wholesale Team Manager. We basically pride ourselves in knowing the guidelines. Knowing them is through and through. And when a broker calls us, our team, my team, they're able to understand. And this should hold true for my West Coast group, our internal group. All of them are guideline savvy. So your broker should call your AEs, whether they're the West Coast, whether they're internal, whether they're East Coast. And our AEs are pride on knowing guidelines and should be able to give you an understanding prior to you submitting a loan.
So why do we need the underwriters then if the AEs know guidelines that good?
Analytics. So in order, like anything else, underwriters are there in order to assure that the documentation matches the broker's understanding. Because brokers listen to borrowers and they have to build up an understanding of where the loan is. Of course, everything is predicated on documentation. And an underwriter reviews the documentation to confirm what's placed in our system is indeed what it's supposed to be. So you need an underwriter to tell you they've met guidelines. You need an underwriter to tell you that they've met the analytics, the loan to values, the debt to income. They are there to help you understand that a borrower who says they have the money, is the money in the right place? Is it in their bank account? Is it a gift? Is it in their business account? The underwriter tells the borrower, the broker, and the account executive that it meets the guidelines. And to Alex's understanding, the analytics and the saleability. So an underwriter ensures a good loan is coming into A&D Mortgage, that it meets the guidelines, and that it fulfills all of our requirements all the way through our quality control department and through closing. So when we at A&D securitize a loan, they're our loans. We create bonds. They're ours. We're not using a bank's programs. They are A&D programs. When we sell them, the underwriter gives us the safety, the understanding that loan is a good loan.
Got it. Mark, Alex, so do you see the financial and the real estate markets evolving in the next 12 or 24 months?
That's a good question, right? A tricky one.
Yeah. I believe that the current real estate market, the current values of the real estate market, I think they may go into a more flat trend in the coming year. It's an election year. in election years, there's a habit of people wanting to keep things the way they are. So you may find in 2024 that you may find values of properties may stay at or just go down a little bit, but stay closely in line to where they are because of the political outcome of the 2024 year. And no one really wants to rock a boat when you're in a cycle, especially in a presidential election cycle.
I would agree with that opinion that property is less likely to go up in prices, especially with the past couple of years increase in the values. The only other thing to consider is also due to the election year, less likely the rates will be going much higher, right? So the rates probably will stay flat or maybe decline a little bit, and that may on that side kind of equalize for a little increase in purchases and kind of stabilize the property prices with a little decrease in the rates.
Got it. That will be it for today. I believe it's time to go and help brokers again.
Indeed. They're probably calling right now.
Right now and sending the emails. Guys, thank you so much for your time. It's been a pleasure as always. I'm glad you were able to answer all of my questions and pretty clear actually. Thank you.
Thank you for having us.
Thanks, Nikita. Thanks, Mark.
Alex. Pleasure.
Thank you. That wraps up another illuminating episode of A&D Market Digest. I want to extend my heartfelt gratitude to our incredible guests, Alex Suslov and Mark Glaser, for sharing their wisdom and perspectives on today's crucial topics. If you found this discussion as enlightening as we did, don't forget to hit that subscribe button and ring the notification bell so you stay updated with the latest trends and strategies in the finance and real estate. Remember, knowledge is power, and here at A&D Market Digest, we are dedicated empowering you in your lending endeavors. Stay tuned for more episodes, and until next time, I'm Nikita Verindab, signing off.